Hello, ladies and gentlemen. Here with Martin Panev, Chief Account Executive and Trading Analyst. Welcome to today's European Session Market Outlook by GDMFX. As usual, starting with the North American markets and what happened yesterday in total. First, the industrial Dow Jones went 7 points up yesterday. The Nasdaq followed with 12. The Dixie Index is up to 95.50 from 95.20. Yesterday, factory orders month-on-month 0.1% better than expected. ISM New York Index 8.1 points higher than previous. 3 and 6 month bill auction 0.005% lower than previous and 0.025 lower than previous. Today, the market services and composite PMI reports are due, along with the ISM non-manufacturing PMI and also the US trade balance, which is the first event. Exports and imports, along with international merchandise reports, are due from Canada. Moving to the European markets, the German DAX 30 and the French CAC 40 ended with little change to the upside yesterday. We had manufacturing PMI reports from all over Europe and the European Union in general yesterday. And all reports came better than expected, without the ones coming from French economy and Spanish as well, where the reports showed a little contraction. The Centix investor confidence for the EU area came out also 0.02 points lower than anticipated. As a result, the euro moved very little versus the US dollar, the pound sterling, the yen, and lost about 10 points versus the New Zealand dollar. It had lost about 200 points versus the Australian dollar as per the rate decision from the Royal Bank of Australia. Today, PPI year-on-year with positive projection, along with the release of the EU Commission's economic growth forecasts, which is quite vital, and we believe it's going to shape the trends. Moving along to the UK markets, nothing interesting pretty much from yesterday. The FTSE 100 gained 27 points. Closed a little above 7,000 mark. No events from the UK economic calendar for today, and very low currency pair movements for yesterday, except versus the Canadian dollar, where we saw 150 points down from 190 range. The elections are due tomorrow, and the sterling will start moving definitely. So, for all of you sterling traders, be cautious. Pacific markets, yesterday in the very beginning of the night session, the reports from the land down under were expected with some turbulence, and traders have managed to get what they were looking for. Starting with the report performance of services, which came a bit negative, 0.3 points below the 50 points level. That was down from 50.2. Trade balance results came lower than expected, but still improvements from the previous measurements are visible. This came as per the contracted exports and import reports. Australia's cut interest rates to a fresh record low to help ease pressure from a strong currency. And also there are signs of improving household spending, is what Mr. Glenn Stevens said. He also said that the Australian dollar has declined noticeably against the rising US dollar. That was over the past year, though less so against the basket of currencies. Further depreciation seems both likely and also necessary, particularly given the significant declines in key commodity prices, such as the iron ore. The Reserve Bank of Australia will release updated quarterly economic forecasts this Friday, providing an insight into the growth outlook for the near future. Yesterday, currency pairs, British pound versus the Aussie, 31 points range since yesterday. The US dollar, 13 points range versus the yen, 15 points range, 14 points versus the Swiss franc, versus the Canadian dollar, 15 points range, and versus the New Zealand dollar, 16 points range. For today, we will be looking at employment and unemployment reports from New Zealand, along with the labor costs reports. Moving to the commodity sector, starting with the S&P 500 index, which had a range of about 17 points, ended positive, and is hovering around the 2105 mark right now. Gold had a range of $16, closed on a positive trend, trading at 1189.15 as we speak. Silver had a range of 60 cents yesterday, at 16.30 right now. WTI had $1.30 range. The International Monetary Fund warned Middle Eastern oil exporters that their economies will pay a price if they don't take rapid steps to scale back public spending amid the global oil price slump. Also yesterday, with Siberia's aging oil fields slowly running dry, Russia is turning to natural gas byproduct to help maintain crude production and meet President Vladimir Putin's target of 10 million barrels per day. Russia produced 526.3 million tons of oil and condensate in 2014, an average of 10.57 million barrels per day. It's on track to beat that this year. Production in January reached a historic post-Soviet record of 10.7 million barrels per day. An output in March remained close to that level. The EIA crude stock exchange is due tomorrow from the US. Natural gas is trading at 2.79 at the moment, and it had a range of 7 cents yesterday. That was pretty much all from me from today. I hope we managed to keep you well informed. Please be cautious. Successful trading. Cheers. Bye-bye.